Hello my dear friends, this is my continuation video to the previous one for the chapter Introduction to Accounting. So if you have not seen my previous video, please go and watch it first, where I have explained the concept of accounting along with its attributes and objectives. So now we'll continue with this video where I'll be explaining further topics. So the first topic for today is advantages of accounting. So let's start. The first advantage is financial information about business. Accounting provides us financial information about business, as it tells us about all the profits which have earned, or in case of any losses which have been incurred during the accounting period. 2. Assistance to management. Accounting provides assistance to management team. How? Because management team needs the financial data to make any business plans or to make any decisions for future. So those are based on the accounting information. The third advantage of accounting is it replaces memory. What does it mean? I'll tell you. The businessman or the owner is just a human being. He or she cannot remember all the transactions which are happening on daily basis. So if a proper record is maintained timely and systematically, there will be no need to remember all the transactions. Fourth, facilitates comparative study. So if a systematic record is maintained yearly basis, so the owner can compare its current year results with the previous year results, and he or she can get to know about if there is any significant fall in the profits, or if the profits are increasing from the previous years, and so on. Fifth one is facilitates settlement of tax liabilities. A systematic record of transactions also helps in settlement of various tax, which are income tax or GST, as these are the evidence to correct transactions. Next is evidence in court. The recorded transactions or the accounting information is also accepted by court as good evidence. The next one is facilitates loans. Accounting tells us about the financial position of the business, and the loans are provided by banks or financial institutions based on the performance and financial position of business only. Eighth one is facilitates sale of business. So in case if the owner wants to sell out his or her business, so the records which have been maintained will help him or her to ascertain or to get the actual purchase price. The next one is assistance in the event of insolvency. What is insolvency? It's bankruptcy. So at the time of insolvency, or at the proceedings of insolvency, there is the explanation required for all the different transactions which have been held in the past. So if the systematic record has been maintained, it will help at that time. Next is helpful in partnership accounts. So at the time of entering into a partnership account or closing of a partnership account, the systematic record will be very useful, because it will be a basis to reach any settlement. Next and the last one is helpful in decision making. The systematic record also helps, the accounting also helps in making many decisions, like what should be the limited or the maximum amount an owner can withdraw from his business, or what should be the reasonable price at which he should sell his or her goods, etc. and etc. Now coming over to the limitations of accounting. As every coin has its two sides and everything has its pros and cons, similarly, accounting also has its limitations along with the advantages. So let's discuss the same. First, accounting is not fully exact. But why? Till now we have discussed that all the transactions that take place are recorded. So why is it not exact? Let's take an example here. If a company has an asset like maybe a machinery, so the life of a machinery is not defined, right? The life of machinery is not exactly defined. So here comes the estimation. So the businessman will estimate its useful life and record it accordingly. Second, unrealistic information. Strange, but will prove it too. So accounting is based on some of the principles and conventions. So there is a convention named going concern concept, which says that business will continue for an indefinite period. But that is not true. The businessman or the owner can anytime realize to shut down its operations. Third, accounting ignores qualitative elements. Right? So you have learned that accounting only records the transactions which are of financial nature, which can be measured in terms of money only, right? So accounting ignores the qualitative part. For example, it ignores the performance of employees and the skills of management team and also the public relations, which are important. Fourth, accounting ignores the effect of price level changes. Money, which is a measuring unit, it does not remain stable. However, accounting presumes that value of money does not change. So, due to which it does not show the correct financial data or financial result. Last one is accounting may lead to window dressing. What is window dressing? It means the manipulation of accounts in a way like to hide some of the facts or to present the financial data in a way to show the better financial position. But this may fail to provide the true and fair view of the financial position of an organization. Now we will discuss the last topic for today, which is branches of accounting or the types of accounting. So there are three types of accounting. First, financial accounting, second, cost accounting, and third is management accounting. So financial accounting is that type of accounting where we record, analyze and summarize the financial transactions before communicating it to the required users. So it helps in determining the profits earned or the losses incurred during the accounting period and also tells us about the financial position of the business. Second is cost accounting. Cost accounting is concerned with calculating cost of products and other operational activities, and it is done with the objective of reducing or controlling cost. Third is management accounting. So it is a wider concept and analyzes every aspect of business including cost, profit, funds, etc. So this is done for management to take the decisions, or we can say the management accounting is specially done for the management team to make the final decisions. So with this, I'll take your leave and will soon upload the third part covering the remaining topics of the chapter 1, which is Introduction to Accounting. So till then, bye and all the best.